300 tons. That's what changed everything. Venezuelan gold disappeared overnight, loaded onto Chinese ships, gone before anyone could react. This wasn't a normal transaction. This was a declaration of war, economic war. And the United States just realized it's losing. Let me show you what really happened. Late December 2025. Puerto Cabello, Venezuela's main port. Satellites captured unusual activity, heavy military presence, Chinese cargo vessels, unscheduled arrivals. Intelligence agencies noticed too late. By the time confirmation came, the gold was gone. $20 billion in value, sailing east toward Shanghai. But here's what shocked everyone. This wasn't announced, no press releases, no official statements. Complete silence from both governments. Why the secrecy? Because this changes everything. Venezuela has been collapsing for years. Hyperinflation destroyed their currency. Oil industry gutted by sanctions. People fleeing by millions. Yet they kept one thing, their gold reserves, until now. China just acquired 300 tons. That's roughly 5% of their official reserves. But experts believe China hides much more. State-owned entities, sovereign wealth funds. The real number could be double. Why does China want so much gold? Because they're building an alternative system. A system where the yuan challenges the dollar, where American sanctions don't matter, where Beijing makes the rules. Gold is the foundation. It requires no trust, no institutions, no transparency, just physical, undeniable value. Every ton China accumulates weakens dollar dominance. And this transfer sent a message to every developing nation watching. The message is simple. China provides support without conditions. No democracy demands, no human rights lectures, just resources for loyalty. That's terrifying for Washington. The market reaction was immediate. Gold spiked $40 per ounce. Mining stocks rallied. Treasury yields fluctuated. The dollar weakened against major currencies. Behind closed doors, panic spread. The Federal Reserve held emergency briefings. Senate Banking Committee got classified updates. The topic was threat assessment, not military, economic. Because the real danger isn't just this transfer, it's the precedent. If Venezuela can move $20 billion in gold outside Western systems, who's next? Iran holds significant reserves. Russia still has stockpiles despite sanctions. North Korea has untapped mineral wealth. The loophole is proven. Diplomatic immunity works. Western surveillance can be bypassed. This is the new playbook. Let's talk about what this means for you. Your savings, your retirement accounts, your financial future. When major gold transfers happen outside traditional channels, they bypass Western control mechanisms. Every legitimate transaction usually moves through London or New York, where it's tracked, taxed, regulated. But this moved through diplomatic channels, classified as sovereign property, immune to inspection. That's dangerous for dollar stability, because every ton that moves east is one less ton backing Western assets. One more ton potentially backing yuan-denominated trade. The balance shifts slowly but surely. History warns us here. 1971, Nixon closed the gold window, ended dollar convertibility to gold. Why? Because France and others were draining U.S. reserves, exchanging dollars for metal. The system was breaking. Trust was gone. We abandoned gold to preserve what remained, but the lesson stuck. Gold flows reveal confidence, or lack thereof. Fast forward to the Asian financial crisis. South Korea liquidated gold to defend their currency. Thailand did the same. It didn't work. The gold left. Currencies collapsed anyway. Those countries learned hard lessons. Gold is your last resort. Once it's gone, you're powerless. Venezuela just did something smarter. They moved gold before a total collapse, before regime change. They moved it to a partner who won't demand reforms. That's a new model. And authoritarian regimes are taking notes. The U.S. Treasury responded within 72 hours. They classified this as concerning financial activity. Didn't mention sanctions yet. But warned entities facilitating these transfers could face consequences. Here's the problem, though. You can't sanction China easily. They're the world's second largest economy. Global supply chains run through Chinese manufacturing. U.S. debt is partially held by Chinese institutions. Any aggressive move requires allied coordination. But many U.S. allies depend economically on China. The leverage isn't there anymore, so what are the deeper causes? Why now? Venezuela's economy collapsed when oil prices crashed in 2014, never recovered. Maduro survives on oil sales to China and Russia, plus other revenue streams that Western intelligence documents extensively. But this transfer's timing reveals something bigger. It happened as global central banks reassess reserve strategies. The Federal Reserve battles persistent inflation. Europe navigates growth recession. Japan remains trapped in stimulus mode. China positions itself as the stable alternative. Moving 300 tons now isn't just about Venezuela's desperation. It's China signaling to developing nations. We're the reliable partner. We have resources. We're building something independent of Washington. Expert analysis is divided sharply. Some economists call this routine. They say gold transfers happen regularly. Media sensationalizes normal transactions. But geopolitical strategists see patterns. Belt and Road Initiative. Hundreds of billions lent to developing nations, secured against physical resources, ports, mines, commodity reserves. This is debt trap diplomacy evolving, asset acquisition statecraft, and the U.S. struggles to counter it without military confrontation, without economic warfare that carries massive risks. The consequences ripple everywhere. For currencies, this accelerates diversification away from dollar reserves. Central banks have increased gold allocations for over a decade. The pace accelerated after Russia got cut from SWIFT in 2022. Every nation saw that playbook. Financial access disappears when geopolitics shift. Gold can't be frozen, can't be devalued by Federal Reserve decisions. It's the ultimate sovereignty asset. For commodities, especially oil, the Venezuela-China relationship gets complex. Beijing now effectively controls significant Venezuelan gold reserves. That gives leverage for favorable oil contracts, technology transfers, port access in the Caribbean. Chinese presence in the Caribbean, backed by financial entanglement, puts pressure on U.S. regional dominance without obvious military buildups. For investors, the message is uncomfortable. The rules-based international order is fragmenting. Assets in one jurisdiction might become inaccessible. Political winds shift unpredictably. Physical assets are being revalued. Gold, real estate, commodities, not just inflation hedges, hedges against systemic instability. Could this trigger a global reset? That question appears in classified briefings, academic papers, think tank reports. A reset means fundamental restructuring. Who holds power? What assets create trust? The last reset was Bretton Woods in 1944, established dollar as reserve currency. Before that, gold standard collapse in the 1930s. These happen when existing systems can't manage contradictions anymore. We're seeing those contradictions now. Massive U.S. debt requiring constant foreign treasury purchases. A Fed needing dollar strength while supporting growth through rate cuts. A Chinese economy slowing but projecting strength for political legitimacy. European economies caught between American security and Chinese economic opportunity. Developing nations crushed by dollar-denominated debt. Into this environment, drop a 300-ton gold transfer. From failing petrostate to rising superpower. It's not just a transaction. It's a symbol, proof of concept, demonstration that alternatives exist. So what happens next? U.S. intelligence tracks Venezuelan and Chinese movements with increased scrutiny. Expect more leaks, public statements, pressure on nations to choose sides. Treasury will expand monitoring of entities doing business with both. But the larger trend is harder to reverse. China continues accumulating gold through market purchases or strategic partnerships. Other nations calculate whether Beijing offers better terms than Washington's conditions. The multipolar world crystallizes into reality, one transaction at a time. For gold, the outlook is bullish. This isn't about inflation hedging. This is monetary restructuring. Central banks are marginal buyers now. They're not price sensitive. They buy for strategic reasons. Gold tested 2,600 before this news. Don't be surprised seeing 3,000 within 12 months. For the dollar, pressure accumulates subtly. Every alternative system built chips away at dominance. That foundation isn't collapsing tomorrow, too deeply embedded, but it's weakening, process accelerating. For Venezuela, this is tragedy. Gold accumulated over generations. It represented potential, could have rebuilt the economy, backed reformed currency, provided foundation for recovery. Instead, it's gone, sent to Beijing for loans that won't be repaid, support that prolongs suffering. When the regime collapses, nothing remains. The gold sits in Chinese vaults, legally transferred, impossible to recover without decades of legal battles. This is a warning. Financial architecture we've taken for granted is shifting. Nations calculate based on a different future. Gold and physical assets are revalued as true wealth stores. The question is, who's paying attention? Who's adjusting strategies, portfolios? Understanding of how the global economy actually functions in 2026? Comfortable assumptions are being tested. Dollar supremacy, Western institutional gatekeeping, rules and norms prevailing. 300 tons of Venezuelan gold sailing to Chinese vaults is the latest test. Watch the data. Watch gold flows. Watch which nations make similar arrangements. Watch how China leverages this acquisition. Watch how the United States responds or fails to respond. The game is changing. Pieces are moving. Somewhere in Beijing, analysts calculate the next move, the next opportunity, the next 300 tons. Are you prepared? Ready or not, the reset has begun.